Welcome back to a new year of indicator testing. Pardon my voice. I've got a cold but did not want to delay the broadcasting of this video too far after its normal publishing date. After a much needed break and some introspective reflection, VP and I made some changes to the testing protocol as described in the blog. VP already made a short video introduction outlining the big picture changes, but we'll discuss a little more of it right here. That way, you'll be able to follow along in the blog. First and foremost, we're only testing on the daily time frame as the premise of the system is predicated on using this particular chart. Second, we've expanded our testing span from 1 year to 3 years. The main reason is to adopt a more realistic expectation from indicators through various markets. While you can have an amazing run when the market trends, you need to be prepared for when it doesn't. We use the data from the open of each candle. In the big picture, it provides us with the information we need, and trying to test it at a tick level would be time prohibitive. We're using the proper no-nonsense Forex way of testing indicators rather than the quick and dirty method that VP initially discussed in the podcast from 2018. The results are more in line with what we'd expect. Our criteria for testing indicators includes starting each testing cycle with a fictitious balance of $100,000. This was chosen for accuracy based on a 2% risk profile. It should be known that we are basing our test from a live account price feed, not a demo account, for additional accuracy. We're also using the suggested 20-to-1 leverage and not 50-to-1 or 100-to-1 and even higher leverage suggested by many brokers. We're also posting the numbers of signals, not trades, and each signal generates 2 trades. This results in a number of outcomes. 1. Both half trades are stopped out. 2. One half trade hits the take profit level and the second half is stopped out. 3. The first half hits the take profit level and the second half also profits through the use of a trailing stop. 4. The trades are considered chalks or no trades because the opposite signal was hit before either a stop loss or a take profit came first. And 5. Stop loss levels for Bitcoin and gold are set to 1.25 times APR, not 1.5, as they are for the Euro and the SPX 500. Continuation trades are not included. The reported metrics include the number of signals, which I mentioned means 2 trades per signal, the win-loss ratio, which excludes chalk trades, and of course the return on investment. As we've always done, default settings will give us the benchmark values to compare the tweaked values. The results will try to avoid what we call curve fitting or overfitting and reflect realistic trading conditions. If you want to learn more about curve fitting, check out the Leman Trend indicator blog. We've included that link in this video's description. Of course, we'll be making our usual comments along the way for entertainment and educational purposes. So sit back, relax, and let's get this show in gear. The imagery for this indicator's name really gets that cyberpunk groove front and center. Granted, it's nothing like that, just our friend Mr. John Ehlers at it again, projecting dense gray matter concepts for all of us to enjoy and possibly profit from. Good stuff. If you haven't figured it out yet, the name of the indicator is the Cyber Cycle and was discussed in an article from 2004. Not too much later, it was coded into an indicator for TradeStation and then for us MT4 fans in 2007. The default view has 2 lines that appear to follow each other closely, creating a 2 lines cross. We discovered that it did better as a below chart, zero cross, confirmation indicator. We wanted to make one quick mention on one of the settings, specifically the alpha setting. It has a somewhat narrow testing range. Outside 0.02 to 0.25, the results get very strange and for the most part useless. Alrighty then. Now that all the good stuff is out of the way, let's go watch this cyber-powered indicator trace a luminescent line across our plasma-infused screens, unless you're still using an old cathode ray tube, then carry on with that steampunk version, you wild human being. Since we're starting the year with this current indicator installment, let's get back to our default by putting this on the Euro-US dollar. We'll still be watching just the last year in this video, contrary to the extended 3-year testing span in the blog. Alright, let's pick it up here with this first long in the video. Recall that a zero cross indicator tells us to go long when they're above the zero line and short when they're south of the zero line. Okay, Some profits right out of the gate. Nice move up, and the indicator did a decent job getting us out relatively quick. Now the short. We've got another win, and it would have been a toss-up if your trailing stop loss on the second half would have gotten you out before the opposite signal. Yeah, no. That quick move to the south would have taken you out, but quick. No matter, just log it and move on. This is one of those instances where your first half trade would have brought home the bacon, but your second half probably would have died on the vine. Bottom line, profits. And that's what gets us from here to there. Not a bad run. Profits on both halves with the extended trade. Those are the ones we love. Did you notice the touch on the zero line? Don't exit too early. Make sure you get a valid signal. And another winner. Good exit, too. Not too much give back on the opposite signal. We'll take that all the way to the bank. Not much to comment on here, just counting the profits. Well, that was a quick about face. You may have been able to close that first half in profits, but the second half was a definite loser. Totally fine though, because at break even, you're not out of pocket. Yeah, another nice long trendy trade for the books. You'd have walked away with a fistful of cash on that one. Okay then, it's just more of the same from this point on, so we'll get things wrapped up. Pretty slick for a simple line tracing a path on your screen. We had some decent runs, which would have definitely brought in the cash, and at the end of the day, that's what it's all about. As we've said in the past, do not make trading decisions based on only one indicator. Develop your system to increase your level of confidence and to magnify your odds for a profitable trade. We've got the version we use in this video in the Stonehill Forex library, so jump on and take it for a ride to see how it works for you. The link is in the video's description. Bad financial advice is a recipe for a quick crash and burn. That's why we don't offer it. You don't need it anyways. With all of our resources, we're pretty sure you can find something to help you. Meet us halfway, put in the effort, and who knows how far you can go. Our only goal is to help you become a better trader.